One of the hedge fund managers who made hundreds of millions of dollars by betting on the U.S. housing market's impending collapse is now predicting a Weimar-like hyperinflation in the United States. Before Bank of America started hinting that massive stimulus measures coupled with an impending spike in money velocity, as well as the reopening of global markets after months of lockdowns, could cause an unprecedented level of economic overheating, the debate over the effects of the current monetary policy was already heated. The post-war psychological phenomenon of pent-up savings losing confidence in currency and authorities was explicitly mentioned by the bank's CIO, but as Bank of America tends to take a more cautious note in his predictions, it's understandable why the bank's CIO didn't mention that particular name. However, others have been less shy in their approach. In 1974, in a lengthy tweet storm, Micheal Burry drew on the hyperinflation of Weimar Germany to argue that we're heading down the same path as the hedge fund manager who has been quite busy sharing his heart with investors and causing fluctuations in the financial community, most recently criticizing Robin Hood and revealing that he has a bullish outlook for the stock market in the future. Cover of Parsons' book shows the old German money, a Reichsbank note of 100 million marks issued on August 22, 1923. Which was worth approximately $20 on the day of its issuance. But 3 months later, as the process of inflation rapidly deteriorated the German currency, it was worth just a few thousandths. A US cent. English speakers began using the term Weimar Republic in the 1930s, and it refers to the city of Weimar, where Weimar's Constituent Assembly was first held. Burry noted that inflation has recurred throughout history, and he compared Germany's policy mistakes during the Great Depression to those of the Weimar Republic in the 1930s. At least for those fortunate enough to be part of the boom, many great fortunes were made overnight, and the cities had an aimless and wanton youth. He quoted from Burry, here were accounts of that time that described a gradual demoralization of the common people, which was compounded by their exhaustion and fear of watching their own precarious position slip, while others grew so conspicuously rich. Meanwhile, almost any kind of business could make money, and business failures and bankruptcies became rare, as the boom suspended the normal processes of entrepreneurship. There was so much speculative activity in the Berlin bus that financial institutions couldn't keep up, and the boss had to shut down several days a week just to keep up with the paperwork. According to then expert, the friends either joined in and made a quick buck across almost all classes, he exclaimed, and the market was open to everyone from the elevator operator up. Although the collapse was spectacular, most of the real money wealth had been lost much earlier, as the structure quietly prepared itself for the blow. The investor highlighted by saying that Germany's inflation cycle unfolded not for a year, but for 9 years, representing 8 years of gestation, and only one of collapse. The structure was quietly building itself up for the blow, when he remembered that this 1974 analysis was published in connection to the events of 1914–1923. His punchline came as he argued that the United States was in the process of gestation from 2010 to 2021. A frugal mindset is preferred above paying out debt finance dividends to investors or investing in risky development possibilities, according to Wall Street Journal writer Charlie Grant, who was quoted by the author. Pre-outbreak, it required $3 of debt to build $1 of GDP, and it's worse today in an inflationary crisis, Burry remarked in a now-deleted tweet on Thursday. Governments will take action to eliminate currency competitors. Bitcoin gold is not a safe haven for investors, according to a hedge fund manager who has been making headlines for saying that Tesla's $1.5 billion bet on Bitcoin was a diversion from the company's problems in China. Chinese regulators have accused the firm of operating a totally owned plant in China, which is the first time a foreign carmaker has done so. It's been uncovered that Burry is a long-term short of Elon Musk's Tesla Motors stock and has regularly criticized Musk's electric car startup, likening it to the dot-com and housing bubbles of the 1990s. Since the beginning of 2020, Tesla's stock price has risen by over 800%, bringing its market capitalization to nearly $780 billion. This is despite the belief that Tesla's elevated stock price might be self-fulfilling, because the company could issue shares to fund its growth. Burry said he saw this same thesis many times when partying in 1999. Short-selling hedge funds and retail investors have drawn worldwide attention, prompting regulatory probes and stoking talk of an asset management revolution that appears to be the result of conventional asset management. In a recent statement to Bloomberg, Burry described the GameStop frenzy as unnatural, insane, and dangerous, warning that it may lead to a massive market panic. In another tweet, Burry warned that passive investing's ick drain, as well as the hype around meme stocks, contributes to market volatility. Burry also warned that a massive spike in the volume of bullish call options is being traded, which he included the hashtags caution to the Y to the public.